Hello, everybody. In this chapter 13 overview, I will be navigating to our week 3 module, as I usually do. And then I will show you the link to the chapter 13 lesson. I'll move through the tabs here and then click on the lesson for chapter 13. Again, it takes you to a Google site, and I go to the overview page, and here you've got, as always, the detailed outline by learning objective for this chapter. As you can see, in LO1 is discussing the overview or introduction to corporations. That's all conceptual. And then in LO2, that's where you get into the meat of the chapter. So you're going to be accounting for the issues of stock at par or usually at a premium. There are other situations where you sort of do something similar to the first two here, but it just doesn't have a par value. So you're going to just see just a few minor distinctions you need to make when you account for no par or stated value stock issues. And then you got also a section on preferred stock. The next section will be accounting for treasury stock. Then LO4 would be dividends, both cash and stock dividends. There's also a little discussion on stock splits. You learn more about that obviously in your reading in the chapter. And finally, at the end, you do talk a little bit about the income statement. You will see that this will be an expanded income statement that you need to now sort of go deeply into compared to what you had in your previous class, Accounting 1A, or the equivalent that you might have taken someplace else. And finally, there's something about around earnings per share. So it's, again, financial analysis. The one area I want to sort of take you to is to the file cabinet, because I have a few handouts that I think are going to be helpful. You will see that, especially this one, 1b chapter 13, this one on dividends, JEs, and then I believe it's going to be this workshop one here will help you with some of the detail in terms of getting the accounting right. If I go to some of those handouts, they're mostly in Excel. You can download these handouts, as you know already probably, by going to that file from the file cabinet. You open it up, and you can actually go here to the file menu, and if you click on that, you will be able to download it as Excel. And so you do that, and you'll be able to then work on it on your own computer. Now, this handout has a number of different types of transactions, the same ones that you saw in the outline by learning objective. And so I simply just give you an example of how you would calculate some of those numbers and also the format of the journal entry. So here is the actual format of, let's say in this case would be cash dividends allocation, assuming cumulative preferred stock. So that given is given right there. Here are some of the numbers that relate to the problem, and then you are able to then do a calculation in the middle here to get to these numbers down here. So my point here is that you need to review maybe these handouts so that you can actually see how I would solve some of those problems that are similar to this one. There's another one here. The next one is similar to the first one, except for this one is non-cumulative preferred stock. The following one deals with stock issues. And so again, you see the given, the calculation, and the journal entry at the bottom. And then a couple more. The next one would be treasury stock transactions. And you have here, again, same format. Here's the given, the calculation, and the journal entry. And then finally, you've got a stock dividend. Again, similar approach. So you should probably review this handout. And again, it's chapter 13, TT Then you've got this other one. This is may or may not be as useful. Same thing as the other one, but it's mostly just conceptual journal entries. Here's dividend allocation. Here's stock transactions, treasury stock dividends, and I just give you some sort of a sample conceptual journal entries. And then that will be the workshop problems. And then here in this other one, dividends GIEs, here I want to show you how to account for dividends, both cash and stock, and what are the effects on the elements of the financial statements in each case. Now notice that this says declaration, so what is the effect of a declaration of a cash or stock dividend here and here? And then you got the next would be the next date for dividends would be the payment phase, and that would be the payment of the cash in the case of a cash dividend, or the issue of the stock in the case of a stock dividend. And again, it shows you what is the effect on the financial statements of each of these transactions. Now, the overall effect for both the declaration and the payment or the issue of the stock would have this kind of effect. So if you actually read the book and you learn how these transactions affect the financial statements, you should be able to understand what this handout is talking about. Now, those are the handouts. Now, let me just walk you through very quickly through some of the exhibits in the chapter that I think are going to be useful. 13.1 gives you the sort of an overview of the advantages and disadvantages of a corporation. And again, it comes down to limited liability and double taxation. So those are the two main points between, or in terms of comparing forms of business, proprietorships, partnerships, and corporations. The next exhibit, 13.2, gives you a stock certificate sample. Obviously, this is a paper one. Has a company name, stockholder's name, number of shares. And so nowadays it's all electronic, so you're probably not going to have an actual certificate, paper one, but it works the same way. Now, this actually is an important exhibit because it explains basically the subsets of the type of stocks amounts you're going to be seeing in the homework and in the problems. There's a difference between having authorized issues. For example, this blue circle there symbolizes the stock, the total number of shares that you are allowed to issue. You're not going to definitely issue all those shares that you are authorized to issue. So that's a bigger circle. And so if you actually issue some of those shares, and then you are here in this red circle, a subset of the blue circle. And in this case, that means that when you issue stock to outsiders, to shareholders, that stock is held outside of the firm. They're separate from the firm itself. So these are actually outstanding shares. And so these are called issued and outstanding shares. That's the distinction between the blue overall number of shares authorized and the red, which is actually the ones that have been issued and are outstanding outside of the firm. In some cases, as you'll see in your reading, there will be times when the corporation will repurchase some of its own stock for different reasons. And in that case, you actually have this orange circle. And so those shares in that circle really represent previously issued stock that is no longer held by outsiders. It's actually held by the firm itself. So these are actually referred to as treasury stock, treasury shares. They are issued but not outstanding. Okay, moving on. Here is the format of the balance sheet equity section for a firm. As you already know, it is very important to understand and remember, there are two sources of equity. One is paid in capital. These are all the transactions between the firm and shareholders. So paid in capital. This section does not reflect the actual operation of the firm. This is just simply transactions between the firm and outsiders. Now, retained earnings is the second source of capital. And in that case, yes, that represents the overall performance, cumulative performance of a firm over time. So obviously, paid-in capital in this case represents about $103,000, and $3,550 comes from the actual operation of the firm over time. Total equity will be $106,550. So that's 1 and 2. Now I'm going to move on to 13.7, and this one is the same as the previous section or previous presentation of the equity section of a firm. So you have paid-in capital again, return earnings, but now you have an extra line here for treasury stock. Treasury stock is basically, again, it is the ownership that has been repurchased, the shares that have been repurchased by the firm, and that are no longer held by outsiders. So that means that the ownership held by outsiders is reduced. That's when you have a treasury stock that shows a negative. So 103 from paid-in capital representing ownership from outsiders, shares issued and outstanding. This represents 3510, the earnings of the firm over time, and reduced by shares that have been repurchased, ownership that has been repurchased and held by the firm, treasury stock. So now you have three sort of lines, even though only these two, paid-in capital and returns, are actually what we refer to as sources of equity. Moving on, here, if you go back to the first Exhibit 13.6, you see return earnings of $3,550. This is the beginning of 2017. That is calculated this way, never mind, just skip that for it because it's a little different than I thought. But the actual format of the return earnings statement is normally the same or very similar to what you saw for capital in your accounting 1A class that dealt with proprietorships. In that case, you said it was beginning capital plus net income or net loss minus withdrawals equals ending capital. Now for corporations, it's very similar. Return earnings, again, the profits of the business is your beginning balance plus how much you earn over that next period minus dividends actually given out. Remember that dividends come from profits, so they have to be reduced. They have to reduce return earnings at some point when you close some of those accounts against return earnings. So that's what this is reflecting here. And at the end, you have ending return earnings. Moving on to more, here is the multi-step income statement. The point here is to understand that there's actually a lot of more detail now in our income statement compared to what we saw in accounting 1A. So make sure you understand there's actually a net sales amount, which is a function of the sales revenue minus some reductions, returns and discounts and so on. Then you subtract cost of goods sold to get gross profit. Then you subtract all of the administrative expenses to get to operating income. Then you have other revenues and expenses to get to income before income tax. You get then the income taxes, then you end up with net income. So there's a lot of different sections now. So you have to determine many times where an amount is going to be placed. Is it going to be in operations? Is it going to be in other? Or below here, there will be actually between here and the net income, there will be another section that deals with extraordinary items or unusual items. And that will be in a separate section in this chapter. And finally, here is 13.9, which reflects what are the different effects of the various type of dividends and also the stock split on the elements of the financial statements, basically the balance sheet. And so if you understand what this is saying, then you're in pretty good shape for this chapter. Enjoy!